We're back with another episode of Living in Granbury and Beyond. Today, we're breaking news about the Fed statement that they are reducing the Fed rate by 0.5%, a 0.5%, 50 basis point cut. This is the very first cut in 4 years. So we've been waiting for at least 2 years for this rate cut because rates have been skyrocketing. Today, we finally get news that for the first time in a very long time, the Fed have finally decided to cut rates. We're going to jump into that. If this is your first time to the channel, we really appreciate you tuning in to today's episode where we look at the Fed rate cut and what that means for the real estate market moving forward. As always, we get calls, texts, and emails from people just like you. Maybe they have a property that they're thinking about selling. Maybe they've got some investments. Maybe they want to invest and get some properties, but they've been kind of sitting on the sidelines waiting for the rates to come down. All sorts of situations and different scenarios that people have. Feel free to reach out to us. Give us a call, shoot us a text, send us an email. We'd love the chance to visit with you and see if there's any advice we can give to help make your move a little bit smoother to whatever it is you're wanting to do. So we are breaking news today. The Fed met. This is Wednesday, September 18th. It is 2:28 my time. At 2 o'clock p.m., Chairman Powell announced they're reducing the rate by 50 basis points. So with that, we're expecting a loosening of the monetary policy. We should see rates start to come down. We should see the market begin to heat up on the real estate side. And if they reduce the rates again in about 30 to 60 days, we'll see this loosening continue over the next 3 to 6 months. I'm expecting 2025 to be what I said it would be a couple of weeks ago when I shot the video. We have finally had the rate cut. They're here. And we've been waiting. Everyone's been speculating about when they would happen, would they not happen? Well, today it is official. They have cut the rates. This is going to be a major impact on your plans if you're thinking about buying or selling next year and you've been kind of sitting on the sidelines waiting for the rates to stabilize. Well, it looks like it's happening. We don't know how much they're going to cut them over the next 6 months, but they started with a big one. If you recall, the last video I did, it was not whether they were going to cut rates or not. It was by how much. Are they going to do a 0.25 or are they going to do a 0.5? Well, they went 0.5. They went aggressive on it and they wanted to go ahead and start moving. I believe a part of that is going to be because of the labor market showing major signs of weakness. I was under the impression, and along with a few other economists, believed that the 0.25% was going to be the most likely. Some inflation data came in earlier this week that looked like inflation was kind of popping up just a little bit by 0.1% rather than down. And so that made me think, they may come back and only reduce this by 0.25%, which is a little worrisome. So I am thrilled that they went with 0.5%, and I hope that we don't see inflation start to peek its ugly head up again here in about 30 days from now in the next inflation reports, because that might put a damper on the continuation of these loosenings of the monetary policy. So what does it mean? Well, assuming we don't get a super negative report next month, from inflation and the things continue to move in the right direction, especially if the labor market continues to show signs of weakening, we're going to see these policies continue to go down and they're going to continue to lessen the rate, drop the rates every 30 to 60 days. That should lead to prices beginning to come back up. Prices coming back up will be fantastic for folks that have been hampered on the sidelines for the past 12 months. Many actually bought, and a lot of people are actually being called back to work. They're not able to work remotely anymore, and now they don't have the equity in order to sell because the market has kind of been, topsy-turvy here lately. Some of the folks that bought in 2022 at the height are having a hard time selling in 2024 just to break even. So this is going to be good news for them. Also means that mortgage payments are about to start going down. So prices going up by, say, $5,000, $10,000 doesn't mean that your mortgage is going up if the rates are coming down. And that's going to be the key. Housing is going to become more affordable from these rate cuts. So with that, I just wanted to shoot a quick video to let everyone know. I know everyone doesn't follow this like me. I've been waking up every day, counting down 3 days, 2 days, 1 day to the Fed meeting. Finally, it's here and they did it. So I'm excited. If you can't tell, I believe this is great news for a lot of those in the real estate industry who've been living under these high rates. For all my clients that have been buying and paying astronomical mortgage payments with these prices and interest rates, there is opportunities for relief with the refinances and an ability to get your mortgage payment lower. So there's great news on the horizon. I'm excited. I hope that I will be able to keep my fingers on the pulse of everything. If you've bought or sold with me in the past few months, my intention is as soon as we're looking like it's a good time, I'll be recommending people reach out and try to refinance to try to lock in some lower rates, because it's going to probably save you a lot of money, especially if the rates are, 1.5% lower than what you currently have. So I really appreciate everyone tuning in. I told you I was going to shoot this video if it happened. This is it. Some breaking news with that, and we're going to keep an eye on the market, and we have several videos coming out in the next week or two. Stay tuned for those. If you have any questions, give me a call. If I don't hear from you, I hope to see you around Granbury.